Okay, now something I mentioned in a couple of the earlier lessons is with a lot of these candles and a lot of the candle formations, Gene and Jay, like head and shoulders and double tops and all that. The big key with this is something that I use from the real estate game, and that's location, location, location. You want to get the best possible house in the best possible neighborhood at the best possible price. Location, location, location. So now this is going to tie into some of the guys that have been in the room for a few days. You'll see this. I don't expect Gene and Jay to see it, but I just want to show you. The reason I would not go short on this candle, even though it closed lower in its lower 50%, was because this was part of a push down. 1, 2, 3, 4, 5 candles down. And if you remember from the last 3 days, you get 3 to 5 candles down, 2 to 3 candles the other way. So even though this candle did give a strong signal that the next candle should go short, where this candle was located kicked it out of the running. Do you understand that? And this is for the guys that have been here before. All right, the guys that have been in the room for a while, you get the idea. You get 3 to 5 candles in the push, 2 to 3 back. This happened to be the fifth candle. All right, so the odds are I'm going to get a reversal before I get it going short again, because after 5 candles, it doesn't matter what this candle looks like. The odds are it's going to go back the other way. Do you understand that? However, when I look at this candle over here, we have 1, 2, 3, 4 candles pushed down, right? Remember, 3 to 5 in your direction, 2 to 3 back. When this pullback started, and again, I'm talking to the advanced guys now. When this pullback started, and I saw this candle close in its lower 50% after the pullback, this is telling me that this trend is going to continue. So the two candles are very similar in that they close in their lower 50%, but it's where they happen that makes the big difference. It's where they happen. Location, location, location. Okay? And we'll get to that later. All right? I want to get these lines off the chart. All right. Any questions on this, Jay and Gene? And Daryl is recording this. And Daryl, when you need me to take a 2-minute break or something, let me know, because Daryl is donating his time and energy to record these lessons until I get it worked out on my side. So everybody give Daryl the claps and to show your appreciation. Oh, Daryl said he already took a break. Okay, cool. All right. And I'm in the process of writing out, PDFs for all this stuff. I have to revamp some stuff from a place that I used to teach at, so that's going to take a little while. All right, so we know that in a candle we have 4 pieces of information, and there are a number of ways to interpret this information in order to turn it into money. But again, the 4 pieces that you need out of a candle is the opening price, the closing price, the ultimate high, and the ultimate low. Those are the 4 key important pieces of the candle. All right. Oh, now we know that these are the wicks. This part of the candle is called the candle body. Okay, the candle body shows you the exact open and exact close. So the rectangular part of the candle is called the candle body. Okay, tell Danny I said hi too. All right, so you with me on that? This is the candle body. These are the wicks. The one on top is the upper wick. It doesn't matter if the candle is a short candle or a long candle. The wick on top is called the upper wick. Okay? Doesn't matter if it's a short candle or a long candle. The wick on the bottom is called the bottom wick or the bottom shadow. Okay, you with me on that? And remember, the The bottom is the lowest point the candle went in that hour, and the upper wick is the highest point it went in that 1 hour, but the candle only represents 1 hour in time. You with me so far? Now, these candles also represent the thinking process of the buyers and sellers. All right, you can learn a lot in the thinking process of the buyers and sellers by seeing what's going on in a candle. When you look at this candle had so much push down that it didn't even make much of a top wick. They just drove this down, drove it down, drove it down. And unlike this candle where we had a nice sized wick at the bottom, this had almost no wick. That's an indication that the sellers are really, really going to try to dominate this market. When you see very little wick on the bottom, that's another clue that price could continue to go short because they're so anxious to get down to that lower price. They don't want to wait. They don't want to wait for this pullback. They don't want to create a pullback. They just want to get where they're going. Do you understand that? This is a way to interpret the information in candles. Now, as we get deeper into this, we're going to go into individual candles, how they're constructed, and what they mean. I just touched on a sampling of it now, just so you can get an idea of just general candle construction, but there's a little bit more to it that you can interpret. And again, if you look at this candle, you see it closed almost at the lowest point, which is an indication that they want to keep driving it down even more. It's another simple way of making an interpretation on a candle. But again, location, location, location. Where did that happen on the chart? That's the key. Sometimes in candles, you can get a clue as to what some of the big dogs are doing. You see these three candles are all damn near identical, almost like there's like a mirror image of each other. What this generally represents is some major player trying to dump a bunch of I started to say shares like stocks, but some major player wants to get out of this. He's got like 100,000 lots he's got to dump. But if he puts a 100,000 lot order out there, every other big player is going to know who it is because there aren't that many guys that could do that. You follow me? So to hide his intention, he'll put 10 grand in this one, 10 grand in that one, 10 grand in the next one. Okay? With Steve Neeson and some of the other candlestick gurus, they have like, they call them the three falling ducks or the three bearded, ladies or whatever. They have all kinds of names for this. But generally, you'll see like 2 or 3 candles almost identical to each other. It's usually someone trying to dump a lot of money in the market, but they don't want to dump it all at one time to give away. I'm just teasing, Curry. Okay, I'm just teasing. I take that back. Okay. What they're trying to do is dump a lot of money into the market without giving away their position. And that's another piece of information you could see. All right. Usually it'll come up in 2 or 3 candles that are just identical. That they're too close to each other for it to be a random occurrence. All right. So you understand that once we get into how to interpret the candles, you'll get a lot of information out of them. But right now, I want you to understand the basics of the candles. So Gene and Jay, this part of the candle, Gene and Jay, is what? What do you call that? What do you call this part of the candle from here to here? Just Gene and Jay. You're half right, Gene, and you're half right, Jay. What's the other half you're missing? Gene and Jay both typed in wick. I don't know if this chat shows up in the videos. You're half right, Jay. There's one more piece of information you need to understand. And Gene is typing, no, Gene, it does not represent the high and the low. This part of the candle from here to here is what? Okay, Daryl, good to know. Chats are not in the vids. So it's something I have to be aware of. I have to repeat the questions from now on. Yeah, Jay. Yeah, it is the highest it went, but that's not the complete bit of information that I want. You were half right when you said wick. What's the other piece that you're missing? Okay, if you guys did not stay. Okay, this is the upper wick. Remember, if it's on the top of a candle, it doesn't matter if it's a long candle or a short candle, this is the upper wick. This is the upper wick, this part of the candle. You got me? That's the upper wick. You guys understand that? Okay, great. Um, this price on this candle is what? That price on that candle is what? Gene and Jay. Okay, Jay got it right. Yep, that's the opening price. Okay, this price on this candle is what? Now I'm talking about this black candle now. This price down here is what? Gene and Jay. Okay, Jay has it right. This is the low. This is the lowest point of that candle. Okay, Gene, you got it right. It's the lowest that it went to. I don't know if there's a delay. You know, there may be like a 2 or 3 second delay, and there's no way I could tell that. Okay, this point, this price on this candle is what? Okay, so Jay is asking me where, so I'm wondering now if maybe they can't see what I'm doing. Let me delete these. Let me start this again. This point on this candle is what? Let's start again because I don't know if there was a delay. There may be a delay even in my drawing on the chart. Okay, Jay says it's a closing price. Absolutely right. Okay, Gene, excellent. It's the closing price on a bullish candle. That's excellent too because it's more complete. But that's good because you have to recognize it's a bullish candle too. All right. This price on this candle is what? Let me just get this right. Ah, okay, that price on that candle is what? And I'm waiting for Gene to type. Price on a lower part of the bearish candle. Yeah, but what price? What price is it, Gene? Okay, very good. Jay, are you talking about the same candle? I'm trying to watch the text as it's going along. Okay, excellent. All right, let's do a an A/B deal here. All right, let me open this. Oh, I need to open this up a little bit more. Um, okay, so this is candle A, and this is candle B. All right, and I'll just make this a little simpler too. A, get rid of this. Get rid of this. And bring this down here. Okay. Gentlemen. Okay, Gene and Jay. Do you see candle A and B as I have them marked? Just let me know that you see those, because I want to make sure there's no delay. Okay, Jay, Gene. Okay, great. Between candle A and B, which candle has the lowest high? Which candle has the lowest high between candle A and B? Okay, great. Which one has the highest close between A and B? Okay, excellent. Which one has the highest low between A and B? Okay, very good. Okay, I see Rob. Oh, which one has the high? Oh, okay, Rob wants to ask a question. Rob is saying, okay, between A and B, which candle has the highest close, A or B? Gene and Jay. Now, Rob, do you see that? If you don't, I'll touch on it because they're right. B has the highest close. Oh, okay, there is a lag. Okay. Well, okay. You good with that, Rob? You see where B has the highest close? Okay, excellent. All right. Between candle A and B, which one has the lowest close? No, Jay, they are not the same. Okay, which one has the lowest close? Okay, excellent. And between A and B, which one has the highest open? Which candle has the highest open? I'm waiting for Jay. Which one has the highest open, Jay? Okay, excellent. Okay, so you guys kind of you fairly much have that down. All right. Daryl wants to check the lag. Okay, I'm going to draw a trend line, Daryl, and I'm going to tell you when I'm stopped. I am drawing a trend line. I am drawing a trend line. I am drawing a trend line, and I'm stopping right now. Okay, no lag. Okay, good. Thank you for that, Daryl. I appreciate that check. Okay. So you kind of got the idea now. Now, there's one other type of candle that I need to speak about, and that's this one. And this is a doji. Okay. What a doji represents is that out of all the buyers and sellers all over the world on the pound dollar 1 hour chart, in the entire hour, they started at price 50 and they ended at price 50. That's a doji. That's generally considered an indecision candle. Okay, it means that they really couldn't figure out which way they wanted to push the market. All right, and there are different types of dojis. This is pretty much a generic doji where the top wick and bottom wick are about the same length. Okay, this is another type of doji, even though it's slightly bullish because you can see it's white. But the doji itself, the wicks are so large, the wicks are far larger than the actual candle body. So they experimented way down here, they experimented way down up here, but when it came back, it was only just a hair more than where it started. So that's still a form of indecision. Okay. Let me just see if I can find another type of doji. This candle here is a doji. You see, and it made a flat line because wherever it started at one price, it ended at the other price. Gene, could you hold for a 2-minute restroom break? You have to keep an old coffee can next to the computer, Gene. You're no kind of trooper, man. There's no soldier in you whatsoever. Get an old Folgers coffee can and keep it in there. Put a piece of paper towel in the bottom of it so you don't make a lot of noise. You don't wake people up. Okay? Now, this is a doji. In this particular doji, the bottom wick is much, much longer than the top wick. Now, this isn't a perfect one, but when you see this type of situation, it's usually called a dragonfly doji because it looks like a dragonfly insect. And a dragonfly insect has these wide wings and a very long, thin body. Okay? So let me just look around. I just want to see if there's any other major ones. Those are the key ones for right now. I want you to understand. You have bullish candles, you have bearish candles, and you have dojis. Those are the three primary things. A candle like this one right here, a candle like this where you have the two wicks are about the same, and usually the wicks, the body is about the same size as the wicks. I don't see one really. Oh, here's a good one. Okay, these types of candles generally are called spinning tops. The wick on the bottom and top are about the same, and the candle body is roughly the same size as both the bottom and top wicks. Those are called spinning tops, where they don't really push the market much in one direction, but they did make it a little bit bearish or a little bit bullish. Okay? So, if I say a bearish candle, which direction is price moving, Jay? If I tell you a bearish candle. Okay, good. If I say a short candle, which way is price going? Okay. If I say a negative candle, which way is price going? Okay, I see Gene typed in south, and that's another term. I was going to get that. I was going to throw south and north in there also. But I just want you to think in terms of anything that kind of connotates price moving down. Any of those synonyms would all apply. A bearish candle, a short candle, a negative candle, a fear-based candle, anything like that indicates short. Okay, so if I say a long candle, which way is price going? And I know this may seem very elementary to a lot of you guys, but it's important. Okay. And again, if I say an up candle, if I say a positive candle, okay, or if I say price is moving north, all the same thing. Okay. Now, remember, these candles represent the psychology of the buyers and sellers in the market. These candles aren't just made by a random computer. Somebody has to reach into their pocket and actually spend some money, and that's what makes these candles get longer or shorter, or it creates these wicks. Here's a dragonfly doji here, by the way, just to point it out. And again, the psychology, the thinking of this candle is it went all the way down here. This was a huge candle. This candle at one point looked like this. You got me? But by the end of the hour, they pushed it all the way back, all the way back, all the way back, all the way back, way more than the 50% mark. And when they closed, they even closed a little bit bullish. That's a massive hint that price wants to continue in the long direction. You follow me? So this is how you interpret the information in only the candle wick. Do you follow that, Gene and Jay? And we will get into this in detail down the road a bit. So just in this one candle tells me this market really wants to go longer. And then our job is to wait for a setup to get us in with a minimal risk and maximum take profit. All right. Now, the combination of all this psychology and all this buying and selling and all this greed and fear creates something called price action. Okay? All of this psychology, all of this buying and selling, it all ends up being something called price action. Okay? What price action is, in my interpretation of it, this is Uncle Lou's interpretation of it. Price action is the natural movement of the market made up of consistent, repeatable patterns. Okay? And Jay, Gene, this is where those things like the head and shoulders and all that other stuff come into play. These are patterns that are created by the buyers and sellers and their psychology. Okay? Price action is the natural movement of the market made up of consistent, repeatable patterns. Everybody on board with that? Gene and Jay. Price action is consistent, repeatable patterns. All right? What are the four? Well, now, in my interpretation, there are four particular building blocks. Okay? Imagine like a kid's game set, Gene and Jay, like Legos or any of those building blocks where you can connect the pieces and make something out of it. There are four of those building blocks, okay? And I'm going to go through them. Let me squeeze this chart in a bit. I want to get okay, this is a good spot. There are four building blocks. Building block number one is an uptrend where prices continue to move higher. That's one building block. Okay, is the uptrend. The next building block is the downtrend. That's another building block. Okay, the next building block is when the market goes sideways, where you get a bunch of candles that can't make up their mind if they're going to go higher or lower. Let me change that color so we could see it. Okay. All right, do you understand that? We have an uptrend where the candles just keep getting higher. They keep getting higher. And then we have a downtrend where the candles keep getting lower or short or bearish. And then we have a sideways market, a consolidating market. And that's when the candles can't make up their mind which way they want to go. So they dance around sideways. Okay? So we have the uptrend. We have the downtrend. We have the sideways market. And the fourth building block is something I call an instant reversal, where one candle changes the whole story. This case, this was an instant reversal. This white candle right here. That one candle came in and pushed the whole market long. This is an instant reversal. This one candle came in and made a dramatic push down. It didn't, there was no sideways. They weren't farting around. They weren't, going through all that nonsense. It hit a price point, and that's not a textbook one, but I want you to get the concept. The one candle turned everything around at the drop of a dime. Okay? That's an instant reversal. So let me find another little spot on the chart. Let's go through these four again, just so you can see. You have an uptrend where the candles keep getting higher. All right. You have the downtrend where the candles keep getting lower. You have your sideways markets where the candle for a few candles can't figure out if it wants to go long or short. You see here, sideways, it can't figure out if it wants to go long or short. And then you have these instant reversal candles like this one or like this one. After this one candle finished, the market just took off and didn't look back. Okay? Or here's another instant reversal. These are rather extreme examples, but I just want you to see that. On that one candle, bang, we're out of here. We're gone. We're off to the races. And it's only these four building blocks that you'll see on a chart over and over and over again. What makes the charts look random, what makes it look like you can't figure it out, is that you don't know which one of the two building blocks are going to be next to each other. You could get an uptrend and then sideways, then a tiny downtrend and then sideways again. Then you could get a massive uptrend and then an instant reversal. Like, you don't know which one of the four building blocks are going to be laid next to each other each day. But I promise you, once you understand how to look at the chart, it's only going to be those four. And what our job is as a trader is to try to recognize which one of these four modes we're in when we turn the computer on. Then once we understand which one of the four modes we're in, our next question would be, well, how do I turn this into money? Do I trade this chart pattern or do I leave it alone? And that will come with time when you develop a system of your own that you like. All right? I am not going to try to teach you to undo anything that you know already. If you've got a method for getting into a trade that you like, keep it. I don't want to take that from you. But I do want to point out that there are some things you can look at on the chart that would help you dramatically increase your risk-reward ratio and increase your hit rate, meaning you'll have more winners than losers. All right? So that's what price action is made up of. Four distinct types of movement: the uptrend, the downtrend, the sideways market or consolidation, and an instant reversal where one candle just changes the whole story. You with me on that, Gene and Jay? Okay, great. Now, all of those four pieces of price action are made up of candles. Okay, they're made up of the same candles we were just talking about, which one had the highest high and the lowest low and all that other good stuff. Every chart pattern is made up of candles, every single one. Each chart pattern has a specific kind of candles built into it. And when you understand the candles that are built into a particular price pattern, it will give you a bit of an edge. And an edge means that you have something working on your side that puts the odds back in your favor. Sometimes it can put the odds in your favor by 90%. Sometimes it can put the odds in your favor by 10%. Okay? But it's about getting an edge. So what I'm going to do is I'm going to take each of the four building blocks and break them down a little bit. All right? I'm going to start with the uptrend. As you can see, if I start at this low point, price continued to go up, up, up until we got to right about here. You see that? Okay, that is an uptrend. Prices continue to went up. Prices continue to go higher and higher and higher. All right, you see that, Gene and Jay? Okay, great. Daryl, you said you saw a setup on a 5-minute chart, a price trap. I just want to know, did you follow through on that? Because I'm not looking at charts at the moment. I'm working with these guys, and I'm waiting for Daryl to finish typing. Earlier, Daryl said, "Okay, it's done nothing." Well, after non-farm's payroll, sometimes the market just goes flat for a while. Everybody's got their rocks off, and now they're laying in bed smoking a cigarette. All right, so the market can get kind of down or slow. Okay, so pound Aussie, you say had a beautiful price trap that broke out, Daryl? Pound Aussie, 70 pip. Okay, what time frame was that? I'll take a quick look at it and then I'll come back to breaking this down. M5 pound Aussie. Okay, so let's go here. Let's find pound Aussie. Now, Gene and Jay, you don't mind if I just take a quick look at this? Pound Aussie. Okay. And 5 minute chart. Okay, I have to wait for this to catch up and update. And I'm looking for the price trap that you saw. Um, pound Aussie. Am I in the right place, Daryl? I'm on a pound Aussie 5 minute. Okay, I'm looking for the price trap, and I'm trying to figure out where the price trap was you were talking about. Now, for Gene and Jay, 2 bars from the low. Oh, right in here. Am I correct, Daryl? Okay, good. Now, for Gene and Jay, one of the four building blocks is a sideways or consolidating market. We have a way that we can spot it using something called a price trap. Okay? And I'll explain it quickly. And this is how we had one of those trades set up the other day, Jay. What happens here in a price trap? If you see this white candle here, and I'm going to make this up a little bit larger. You see this white candle, Gene and Jay. You see where the ultimate high of this candle is. Yes? I'm going to put a line at the ultimate high. And you see the ultimate low of this candle right here. Okay, do you see that? The ultimate high and ultimate low of that candle. Gene and Jay, do you understand that? What I want you to notice in this price trap is that the next two candles, after this white candle, the next two candles, their closing price. This is important. This is why you need to know the difference between the high and low and open and close. In the next two candles, the closing price could not close above that ultimate high on that candle. And keep in mind, we're on a 5 minute chart. So Gene and Jay, how much time do each of these candles represent? Okay, very good. So I want you to notice that for 10 minutes, price could not close above this high or close below that low. And when I say close, I'm talking about this flat part of this candle has to actually come down here and do like one of these deals. It's got to actually close below the low. You get me? It's got to do one of these. It's got to close below the low and maybe have a little bit of a wick on it or something. The wick isn't important. Oh, how did that get over there? I didn't want that. All right, my drawing is going to kind of suck a little bit, but I think you get the idea. Oh, it won't let me put this thing in the middle. I'll be damned. All right, so I'm not going to worry about it. But you understand, it's got to close below this price. Is that clear? And Rob is saying we're in another one now. Yeah, we're not yet, Rob, almost, because the second candle has to finish. Rob, you got that? This candle's not finished yet. This candle could end up all the way down here, or it could end up all the way up there. Once we get the three candles have to work in conjunction. Once the three candles work together, then we have a price trap. Back 9 candles. One, two. Oh, you're talking about this big candle, right, Rob? You're talking about, yeah, but remember, it's non-farms payroll, so this one candle is going to be an aberration. And on a big news day, a lot of this stuff you throw out the window because you don't know how dramatic the news is going to affect the market. Technically, he is correct. This is a price trap because you'll notice that none of these candles, not a single damn one, could close above this high or close below this low. So technically, Rob is correct. But because this is a news candle, I generally like to let the news do its thing and get out of the way, and then we can move on. Now, Jay, what is a price trap? A price trap is a place on the chart that is surrounded by a high price and a low price that the buyers and sellers can't crack. Okay? This candle became a trap. You see, here they tried to get out of the trap. They got one arm out, but this price, the high, pulled it all the way back in and it closed underneath. You see that? Here again, they tried to get out of the trap. They got one arm out, but this price, this pink line, was so strong it pulled the candle back inside. So we're still locked between this price and this price. It's another form of indecision. Nobody really can determine which way the market is going to go. Okay, no one's really put enough money in the market to really push it one way or another. And if you look at this candle, Jay, you'll see that this candle got out of the trap and closed. It made that thing I was trying to draw. This candle closed above the trap. And after it closed outside of the trap, they ran for the damn hills. They got the hell out of there. All right, Gene is asking me to repeat the definition again. A price trap is a set of two price points, a high and a low, that the market cannot break through in either side. And when I say breakthrough, this is my definition. The Uncle Lou definition is that it can't close above that high or close below that low. Okay? And you see these two candle wicks. That's why I mentioned, understand that, this is just the upper wick. A lot of people might have got tricked into taking a trade here, which in the end it would have worked out. But more often than not, these are fake outs. But what I want you to see is that we could not close above this high, and we could not close below this low. So the fourth candle breaking is what we pay attention on. Yes, John. What we want is that candle to close outside of that trap. And ideally, we want to take a trade in the correct direction. Okay, now Jay is asking, do we lob for short according to the breaking candle? Do we long for short? Or are you asking me, do we long or short? Can you rewrite that question? Well, in these price traps, ideally we want to be trading in one direction. Okay? And what we look for are clues in the other candles as to which direction price is most likely to go. We look for clues in the rest of the candles for what direction price is most likely to go. Now, I spoke earlier about these candles. You see how this candle, it closed. If I make a 50% mark on this candle, is right about there. So in that 5 minutes, price went all the way down here, but the buyers pushed it past the 50% point. You see that? And it closed on the high side of the 50%. That's a clue that this market may want to go long. Do you understand that? And this formation right here is called an evening star. We have a strong bullish candle, a pin bar, and then a strong bearish candle, a pin bar, and then a strong bullish candle. This is one of the major reversal signals. Okay? You have a strong push down, and then all of a sudden this pin bar. And if you remember from something I mentioned earlier, you get 3 to 5 candles in the direction of the trend, and then you get 2 or 3 as a pullback. 1, 2, 3, 4, 5 candles short. This is the 6th candle. I'm not thinking to go long. I'm not thinking of going short here anymore, because 3 to 5 candles in the direction then 2 to 3 candles the opposite way. So you see that? I'm ready for a pullback because I'm like 5 candles deep now, and it made a pin bar. When I add the two of these together, I'm thinking this market wants to go long. And then when the market makes this price trap right here, I'm thinking that the market's going to take off long again because I've got this evidence down here to support it. So what we do is we look for information that will lead us in the correct direction. Okay, and the market never moves in the wrong direction. Never. It never moves in the wrong direction. More often than not, it may not move in the direction we want it to go into, but that doesn't mean it went the wrong way. Okay, now Rob, do you understand why I wouldn't count this as a price trap? Because it's a news-based candle. So the width of this candle is going to be so far out of whack, it would make your stop losses ridiculous to try to trade it. But your eyes were 100% dead on. It is technically a price trap. And every price trap is not tradable, by the way. And that goes back to location, location, location. Oh, yeah, Rob, it can be more than 3 candles. And I want to clarify that for Rob. Rob is saying yes, but I wanted to make sure everyone understood that it could be more than 3 candles. Yeah, now a price trap could be 50 candles, but you can't call it a confirmed price trap until you get the first 3 candles to do what you need them to do. Do you follow me on that? Once you get the first 3, then it can be 90 candles, okay? Now, someone pointed out that we were in, I think it was Rob pointed out that we were in a price trap. And remember I said I had to wait for this candle to close? Remember, this candle was all the way up here, a solid candle that looked exactly like this. But notice that it could not close. And again, this is key. The closing price could not get above the high of this candle. And the closing price could not get below the low of this candle. These candles are trapped in this price range. Jay and Jean, is that clear? And this is one of several setups that we have. And again, I like consistent, repeatable setups. Consistent, repeatable. That's my definition of price action. The natural movement of the market made up of consistent, repeatable patterns. All right, so this was the price trap here, and it did break out. And when it broke out, again, a rule for the price trap. Now, again, today is a news day, so it's going to make the candles a bit odd. Ideally, we should get twice the distance of the price trap after it breaks out. So this was 28 pips, and let's see how far this went. 28 and 28 is 56. So we actually got twice the width of this box on the price trap. That's the general rule. Okay, when you see a price trap, you're shooting for twice the width of the box. Many, many, many times you'll get more. Trust me. But that's a general rule. So this way, if you want to have a fixed rule that you can work with, that you can measure, that you can quantify, you don't have to scratch your head. You don't have to rub your chin. You don't have to pick up the phone to call somebody. You can see I need 3 candles to make a confirmed price trap. I need the first candle, which some people call a master candle, okay? And then I need the next 2 candles to get trapped inside the high and low of the first candle. That's a very easy thing to look at on the chart and figure out. Very easy. All right? So that's what we need. And you see we have this price trap here that's about to, it could break short, but again, see where this candle closes. This candle may close way back up here. This candle could come all the way back and make a pin bar to touch the top line. All right? But on news days, because the news can be so violent, sometimes a lot of the traditional patterns may not unfold the way you expect, simply because of the volatility in the news release. But on most normal days, or at least an hour after the news, the market goes back into its normal routine. All right? Now, what chart were we on? I think it was a pound dollar chart. I just want to go back to that. And we were talking about the price action. All right. I want to thank everybody for letting me get off that topic a bit. And I want to thank Gene and Jay for allowing me to digress a bit. Okay. Now, I think we were talking about an uptrend or a downtrend. I don't know which one it was, but well, I'm going to take this downtrend for now. So we talked about the four building blocks of price action: uptrend and downtrend are what I'm going to talk about right now. Okay? Imagine, Gene and Jay, that you've got a box of candles. Okay? And they're all different size candles. And the candles are kind of like Legos or building blocks, like a kid's game. And you can build stuff out of them. If I told you I wanted to build a downtrend, what kind of candles would I need first to get started? If I had to build a downtrend, Gene and Jay. Okay, Gene, very good. Jay, if I had to build a downtrend and I had a box of different kinds of candles in it, and I could reach in a box and pull out any kind of candle I wanted, what kind of candle would I need to make a downtrend? Okay, that's good. That's bearish. Okay, excellent. So you got the idea. And a bearish candle is defined as how? Well, what defines a bearish candle, Gene and Jay? How do you know a candle is bearish? Wrong, Jay. Jay said it's a dark candle. No, wrong. That's the wrong answer. Yeah, you're closer to the answer now that it's going down. And Curry, thank you for that, but your name is not Gene and Jay. Okay, Gene is correct. It's heading south. No, Jay, not lower high, lower low. All right. A bearish candle is a candle that closes lower in price than when it started. That's the thing you have to remember. A bearish candle is a candle that closes lower in price than when it started. Okay? That's a bearish candle. Now, in a traditional downtrend, what happens is the way a downtrend is constructed, I'm going to break the DNA of a downtrend down a little bit. Okay? In a downtrend, you get a push down like we have here, 3 to 5 candles in the direction of the trend, and generally 2 to 3 candles in the pullback. And then you get 3 to 5 candles in the direction of the trend, and generally 2 to 3 candles in the pullback. You get 3 to 5 candles in the direction of the trend, and then generally 2 to 3 candles in the pullback. Do you see that? It's like waves. Jay and Gene, a downtrend moves in waves. It goes down and then it goes back up again. It goes down, then it comes back up again. It goes down and it comes back up again. Do you see that, Gene, Jay? That's how a downtrend behaves. And in a downtrend, each wave, if I could call the top of this a wave right here, each wave in a downtrend gets lower as the downtrend progresses. So the waves get lower in height. You see that? The waves get lower in height as we go down. Now, Gene is saying the opposite or a W on an uptrend, correct? Gene, let's just talk about the downtrend. Okay, well, let's just talk about the downtrend right now. And don't look at this as M's or W's. because that will throw you off. That's a whole other trading strategy. I just want you to see that the waves go down in a downtrend. And you see this wave that came back up couldn't close above the prior wave. You see the wick went nice and high, way above this one. You see that? But look at where the closing price was. That's why I said the information on those candles is crucial. The closing price could not close above this prior wave. Okay, and then it went wave down again, and then, you know, then another wave down. Okay? Do you see that, Gene and Jay? In a downtrend, price moves in waves, and the waves on the way down are lower than the prior wave. All right, let me get rid of that. That's on the top. Okay, on the top of a downtrend, the waves get lower. On the bottom of a downtrend, the bottoms get lower also. You see here we have a bottom here, a wave to the bottom. And then look, here's another wave to the bottom. And here's another wave to the bottom. And you see how the bottoms are getting lower also. So in a downtrend, we start at a high point. And then when we get a new high point is made, that high point is lower than the previous high. So in a downtrend, we get lower highs. You see how each of these highs is lower than the prior high. You see that? In a downtrend, we have a high. This high is lower. That's the wave. This high is lower. That's a wave. This high is lower. That's a wave. This high is lower. So we get lower highs. And then on the bottom of a downtrend, we get lower lows. This becomes very important information later. In a downtrend, we get lower highs and lower lows. This is very rudimentary ABC stuff, but a lot of people don't really pay much attention to it. Okay, we get lower highs and lower lows in a downtrend. You see that? How each wave, the wave on the way down gets lower than the prior wave. The wave on the way down gets lower than the prior wave. Do you understand that? Gene and Jay. Okay, excellent. Now, what you guys are going to do for homework is... Oh, wait, you don't have a platform, do you, Jay? Do you have a platform? And Gene, do you have a platform? I'm not sure what you guys are doing. Okay, what you need to do then is connect with Joe after we're done today and get a platform, because there's not much of a way you'll be able to do homework. Okay? And for right now, get an MT4 platform from him, a demo account. Oh, you have Prime Trade? Is it MT4? I am probably going to switch over to CTrader anyway myself. Okay, it's similar. All right. Do you know how to take snapshots? Oh, you have CTrader. That's good. Jay, do you know how to take snapshots of your screen? Gene? Jay? No, not by phone. God, no, no. By the time all the resolution goes through all that, oh my God, that would be a nightmare. Okay, so that's something that we're going to have to work out. I'll try to email you guys over the weekend, and we'll see how we can set this up. Yeah, Curry. There are a lot of different things they could use. They could use Jing. They could use Screen Capture. They can use Snagit. They could use the built-in screen thing in Windows 7. There are a lot of ways they can take pictures. I'll contact you guys over the weekend, all right? But now let's go back to this. In a downtrend, you have 3 to 5 bearish candles, and then 2 to 3 bullish candles on the way up. 3 to 5 bearish candles down, 2 to 3 bullish candles on the way up. All right, do we agree with that? Can you see that's what's happening in this downtrend? Okay, Gene, give me a pair, and Jay, give me a time frame. And I want you to see that what I'm showing you works on everything. Gene, give me a pair, and Jay, give me a time frame. We're on pound dollar, Gene. And okay, so you want to go to 1 hour chart. All right. So now I'm going to go back here a bit, and you see that this is a downtrend. You see we have a high point here. And do you see that the wave, we went down 3 to 5 candles? You can count them. We went down and then 2 to 3 candles back the other way. Now, some of this came from a guy, Oliver Velez, and another gentleman, Bigelow, I believe. They never amplified on how to really turn much of this into money, which is where I kind of wanted to do something different. But then again, you have 3 to 5 down, and you have 2 to 3 in the pullback. See that? This pullback ended up being a pretty big one. Here's another push down, and then here's our pullback in here. All right, let me get rid of these. Now, do you see where we're making lower highs here? Here's our high, and then on the next wave, the high went lower. And then on the next wave, the high went lower. And then on the next wave, the high went lower. And then it went lower. Okay, then it went lower. Do you see that? The same repeatable, consistent pattern. That's what we look for in price action. All right? And if we look at our lows on the bottom, we have a low here. And then a wave down, we made another low. We made another low. And I'm skipping this one in the middle only because it's like a big ass price trap in here. And it changed price a little bit. But so don't, you know, if Mike Schuman's looking, he'll probably say something about it. But you'll see there's another low. So as the waves go down, we get lower highs and lower lows. All right, you understand that? So 3 to 5 in your direction and 2 to 3 the opposite way. Okay, Daryl needs 4